everyone. Let me share the presentation deck first. So everyone could see it. So yeah, good evening, everyone. So again, my name is Eddy, the head of Asia at Direction Investment, a US-based ETF manager specializing in leverage and immersed ETF, as well as thematic ESG-related ETF. So first of all, I would like to thank City University of Hong Kong MBA Business School for the invitation. And it's my great honor to be here today. So I think ESG is extremely broad topic, and it becomes more mainstream for governments, academia, investment professional, regulator, public community, talk about it around the world. So in the coming 20 to 25 minutes, I would like to share you some general ideas surrounding the evolution of ESG investing on some investment principle and regulation. On top of that, I will also give some update on the development of ESG ETF, as well as hydrogen investment, right? So why hydrogen could play a vital role for many countries to achieve the net zero or carbon neutrality. I think that's a very interesting topic. So before I start, a quick disclaimer. Here, the presentation material and content is for educational purpose, and it is not an offering or solicitation for trading or investing in any investment products. So it does not constitute any investment advice or representation from Direction. So what is ESG investing? So simply the definition is like ESG investing is an approach for investors, in particular for institutional investors, to manage the assets which incorporate environmental, social, governance factors into their investment decisions. So by integrating ESG factor as part of the investment process, it's not just make the world better, but from financial performance objective is to achieve a better risk-adjusted return in the long term. So here we are talking about long term, not short term or month return. It's talking about long term risk-adjusted return. So in the very early days, I think some other speaker also touched on that. So investment communities, corporation, they have different interpretation on what ESG exactly mean to their corporate culture, to their investment philosophy, and more importantly, the fiduciary duty to the stakeholder like beneficiaries, shareholder, clients, communities would be different. So in 2005, the United Nations Secretary invited a group of experts, mostly the largest institutional investors, to develop the 6 principles for responsible investment, and with the possible action to achieve each of the principle. So I think that is the good starting point for investment communities, as the 6 principles serve as one of the global ESG responsible investment standard, framework, guideline, or common language, and for the institutional investors to rely on this to develop, implement, and achieve their own ESG and sustainability investment best practices. So for example, right, some of the possible action for principle 1 is develop ESG related tools, metrics, and analysis. Also, the asset owner or have to access the capabilities of the internal or external investment manager, how they incorporate the ESG issue. So for the principle 2, I think it is getting more important as the investment manager have to actively engage with the company they invest, not just focusing on earning results or business performance, but to better understand or even giving advice to those companies they invest to incorporate ESG factors in their business objective and operation. So in 2006, there were only 32 asset owners and 63 signatories for signing up the PRI. So asset owner means pension fund, sovereign wealth fund, endowment fund who owns the investment decisions on behalf of a group of beneficiaries. Signatories are mainly investment manager, service provider such as index provider, consulting firm who serve the asset owners. So as of 2021, the asset owners have grown to over 600 and with more than 3,800 signatories globally. So the signatories mean they are publicly demonstrate its commitments to responsible investment. And the signatories have to report on their responsible activities each year as to ensure they fulfill the PRI principles. Just now also, Angel also touched on this. So US also developed a set of 17 sustainable development goals and hope to achieve all the goals by 2030. So for some ESG or impact investing, the investment objective would try to align one or a number of those goals. So, and for now, when you look at some sustainability reporting for some listed companies, normally for the large one, so they would also referencing some of the, some of this SDG as the business mission and objective. So here, let's take another look of some of the EU regulation. This one is called Sustainable Finance Disclosure Regulation. So the purpose for having this rule is to help investors to choose between product classified into 3 categories. And why I talk about this, because in Hong Kong, a number of EU domicile fund listed distribute in Hong Kong through the banks, through the online fund platform. So a lot of investors in Hong Kong, actually they're buying those user fund, which is actually under-regulated by the EU. So actually this one applies not only to the product, but also to the firm level. But when you look at the product, so it's actually on the right-hand side. So it's actually classified the fund into 3 categories. So Article 6, Article 8, and Article 9. So basically, when you look at all those ESG metrics, right? So Article 9 is what we call light green fund, and Article 9 is what we call is the dark green fund. So it is actually trying to, the regulator is trying to increase the transparency, and it helps the investor to choose the right product that they really want to invest, right? Rather than as to avoid the greenwashing. Greenwashing means the firm or the product investment strategy is not as environmental or green friendly as they came to the public. So in Hong Kong, actually, SFC also has similar rule and code to separate the fund or ETF into different ESG category. So in order to fulfill, have a stamp on the ESG funds, they have to fulfill some criteria. And then the fund will basically separate into like different key investment themes like climate change, environment, or different key investment strategies such as best in class, positive screening, impact investing. So as I said before, ESG is very broad, and here I would like to highlight some of the organization, associations, reporting framework and regulation, which many investment managers, corporations have to keep a close eye on. So for the left-hand side, for the global goals and principles, we have touched on a bit of the UN PRI, the UN, 17 different sustainable goals, UN Global Compact, and greenhouse gas protocol basically provide the reporting principle on GHG CO2 emission. And for reporting framework, TCFA focusing on climate change disclosure, GRI is related to corporate sustainability report framework, and actually is widely adopted by the stock exchange and listed company globally. So in Hong Kong, all the Hong Kong listed company follow GRI for their sustainability report. So and the last one is SASB. It's actually similar to GRI, but focusing more on industry-specific standard that may impact their financial performance. So for the right-hand side is a set of regulation and rules, which are mostly implemented in EU. So we have been talked about, SFDR is a new one, which basically implemented in last year. So basically, there's will be much more new initiative, rule, regulation in regards to ESG sustainability every corner of the world. So the changes is from more voluntary to mandatory, less detail-oriented to more detail-oriented. For example, US SEC, right, the US Securities and Exchange Commission, just recently announced their climate risk disclosure proposal, where all the listed company, in particular for the large one, have to mandatory to disclose the GMG emission, the CO2 emission on scope 1, scope 2, and scope 3. So scope 1 actually capture the direct usage for that company. Scope 2 capture the indirect usage from generation of the purchased electricity heating. But scope 3 is hard because scope 3 actually capture all the indirect emission that occur in the company's supply chain. So scope 3 emission, that data is definitely much harder to capture and measure. So the data is not yet finalized, but I think the good thing is with more regulation in place, we might help the companies, the corporation to speed up the ESG adoption and transformation. So now let's look at a bit of the development of ETF. So according to Morningstar, right? So the investable asset on ESG or sustainable fund is crossed $2.7 trillion US. Again, different provider, they have different source, they have different classification on how to classify it is a ESG or sustainable investing. So according to the data from Bloomberg, the ESG sustainability related ETF reached $450 billion in February this year. And we also see the inflow consistently increased in the last 10 years. I think one reason is that public awareness on ESG topic is getting more and more public awareness. So it encouraged more investment manager to launch such kinds of products. And the reason I think is more about the market structure, because there's a more innovation, more new developments in some industry and sectors such as like electric vehicle, renewable energy. So more green products have launched because of the industry transformation. So within the ESG ETF is highly concentrated in equity. It's pretty much same as the mutual fund as well as the private fund. I think more on equity, but recently, I think the last couple of years, there are more green bond fund, more sustainable finance fund tied to the fixed income. So the investment ideas span across different themes, sectors, index methodology such as like EV, well ESG, clean energy, hydrogen, ESG leader, low carbon, sustainable development. So within the exchange traded product, there are lots of theme on ESG that investor basically could choose from. But sure, again, right? So sometimes when you do the investment, not just looking at the name, you have to really go through their prospectus or fact sheet, right? Or see the public information towards that fund rating. And there's some free resources actually to weigh how green the fund it is. So there's a lot of free resources that investors could look at before making any investment related to ESG. So now let's turn to topic to the hydrogen investment and where the hydrogen could be the next giant clean energy and tackle the CO2 emission. So the global GHG emission reached 49.4 billion tons of CO2 equivalent, is basically up around 10% compared to 10 years ago. So energy sector still represent the big part of GMG emission, and basically makes up of industry across transportation, building and industrial use. And the GHG emission translate to more pollutants, negative impacts to biodiversity, and high temperature. So the last year have been the warmest since 1880. So, and according to Paris agreements, we aim to limit the global temperature well below 2 or preferably 1.5 before the pre-industrial level. So the pre-industrial measurement is between 1951 to 1980. So with that, right? So 135 countries has actually committed to achieve carbon neutrality mostly by 2050 or 2060. But the issue, we all know that the problem, we all know this is the big issue, but how to tackle it. So then I will talk about what is hydrogen, what makes it so critical to create a decarbonized or low carbon economy. So first of all, hydrogen is the lightest element on the earth. So it's considered a secondary energy. And it does not occur naturally in quantity, and it must be produced or generated from other source of energy. So when we generate energy from burning or heating hydrogen, normally with oxygen, the only byproduct is H2O, which is water. So there is no CO2 emission. So making hydrogen is a clean source of energy. However, be careful, whether hydrogen is 100% clean is really depending on how the hydrogen is being produced. So broadly speaking, in the market, we classify hydrogen into three different types of hydrogen. So where gray hydrogen and blue hydrogen was actually generated from fossil fuel, like natural gas. And through the hydrogen production process, it creates carbon dioxide. But the differences for blue hydrogen is that the emission of carbon are being captured or stored or reused. So, but gray hydrogen doesn't really capture any CO2. So blue hydrogen is considered a cleaner version of gray hydrogen, or we consider it is a low carbon hydrogen. So for clean hydrogen, it was 100% produced from renewable energy, like solar, like wind. So that is no carbon emission. And it is truly green, sustainable energy, and surely be the ideal types of hydrogen for us in the future. So here is an illustration on how the hydrogen fuel cells works and to support different usage of hydrogen energy. So the hydrogen, there's some supply of the hydrogen, and then we act with the oxygen across the electrochemical cell or membranes to produce electricity. So through this process, again, the byproduct is water and a small amount of heat. So basically, is a really clean energy to support some sort of like hydrogen car, etc., etc. So another benefit of hydrogen is that it has the highest energy density among other fuels, which means greater energy could be stored or transported for the same amount of volume. And hydrogen is a versatile source of clean energy with multiple applications. It could use it in mostly used in transportation, industrial production like steel or iron, building. So many countries have used hydrogen energy on long-haul vehicle like trucks, bus, or planes. So for some countries like EU, right? EU will spend 1 trillion in the next 10 years on clean energy initiative, with close to half is related to hydrogen. In China, R&D spending on hydrogen increased the 6-fold compared to 5 to 6 years ago. Japan, South Korea has spent tons of money in developing the hydrogen fuel technology. So they want to develop more hydrogen car rather than EV. So they think that EV is cleaner version, but ultimately it's not as clean as the hydrogen car. So hydrogen could going to be more mainstream in the future because some barriers, I think in the past there's some barriers, but in the last couple of years, all those barriers have been largely tackled. First of all is cost. So the cost of production of green hydrogen has fallen by 50% in the last 5 years, and foresee to have another 60 to 90% drop by the end of this decade. That's one. And secondly is the technology. So more global R&D efforts, government sponsor, and technology has been hugely approved across the whole hydrogen supply chain and infrastructure. So from the production, from the safety, storage to the end of the value chain. So one of the most important things is that when you have a new industry, one of the most important is that hydrogen has become a more commercialized industry. So this is the key in order for many countries to start looking at it. And there's a lot of private investment so that there's a more company would have the capital to do the R&D. And not just for that, I mean, so this is some of the countries, right, that are backing up the hydrogen economy, as I touched on before. And this one, for many countries, so that's the Hydrogen Council. The numbers basically share there are over 100 members across different companies across the world, and with 228 hydrogen projects already announced and go ahead through the whole entire hydrogen value chain. And the potential growth of the green hydrogen is huge. Currently, green hydrogen only represent less than 3%. It's actually about 1 to 2% for the total hydrogen market share, which including blue hydrogen and gray hydrogen. So the potential growth for the green hydrogen is expected to be 700 or 800 times larger than today by 2050 if all green hydrogen take all the hydrogen market shares. So just statistics, right? In the US, right? IEA did a research. So if in the coming 30 years, if hydrogen or green hydrogen to develop to be a major clean source of energy, it could help US. It could help US to deduct 13% of the CO2 emissions. So that's a huge benefit, and deduct 30% of the US transportation CO2 emissions. So so that's something I believe many countries will put a lot of commitment to, investing, to transforming their energy from fossil fuel to hydrogen clean energy. So in the US, actually there's some ETF have been launched last year to track the hydrogen indices currently available. So there is an index called Index Hydrogen Economy. So basically investing in 30 stocks and capture 5 related hydrogen investment themes from the upstream to the downstream. And the index is, we balance on a quarterly basis. And this is the performance of the index. So that's the end of my sharing. So thanks for all your participation. Thank you.
Thank you. Thank you, Mr. Eddy, for sharing the sustainable finance investment